US recession, the Bitcoin ETF rollout, a Bitcoin halving event coming in just 5 months, coupled with the US elections and the fact that people are losing confidence in the system, in the government, in the banks, as the 5th bank this year in the US fails. All of that and more on this episode. I'm going to let you know exactly where we are on the macroeconomic scale and exactly how this is going to play out according to history, because it doesn't repeat, but it often rhymes. And in order to understand where your precious altcoins are headed and how to play this bull market to the best of your ability, it is essential to understand what's in this video from start to finish. I'm going to play some really telling clips on Gary Gensler from the SEC, Elizabeth Warren, who many say is paid by the banks, is lining her pockets with the bank money. And I'm going to help you understand just exactly how this is the perfect storm to send Bitcoin to 1 million and why you need to be positioned right now. This may very well be the last chance that US citizens and global citizens have at real financial freedom. And that's coming from somebody who crushed it last market, as I got in right in this era, this same time frame last cycle, right before that bull run. And I did a 65x on my top coin, and a lot of my other altcoins did a 40 to 50x. And I want to help you experience that same success. You guys are what gives me the fuel to continue to create these videos. I want you all to win, and I love hearing where you're tuning in from. Africa, South Africa, California, Australia, Ireland, England. I absolutely love it. I'm so grateful for all of you guys, and I'm so happy to be on this journey with you. So let me know where you're tuning in from down below. And without further ado, I'm your host, Megan Nilsson, aka Crypto Megan, tuning in from sunny southern Marbella, Spain. And let's get right into it. 2024 is set to be a year to go down in history, and together we're going to unpack just exactly how that could unfold based on macroeconomic factors paired together with the Bitcoin halving, which some say is by no coincidence. So if you can understand this, if you can understand what happens next according to history, how it's previously played out, and what makes the most sense based on the US debt and money printing, you're going to win. You're going to win. And I know what you may be thinking, but I only care about my altcoins. Why do you talk about Bitcoin or the economy? If you understand where we are at in the cycle, you'll know that Bitcoin, for now, dictates what the rest of the market does. All of the eyes are on Bitcoin. And as soon as Bitcoin's done with its show, that's when the altcoins start to shine. So if you want to know exactly when that'll happen, we must understand this first. So make sure you watch until the very end as I show you exactly how people are getting prepared to take advantage of this run. So let's jump right into it. I like this here from Lark just to set the tone of the episode. US will launch a spot Bitcoin ETF. China, via Hong Kong, will launch a spot Bitcoin ETF as well. Only 2 million coins left on exchanges, tens of billions of demand coming. Get ready. This is what we know to be almost guaranteed to happen as we gear up for the ETF approvals in late 2023 or 2024. But what happens next? So first off, to set the tone, the chart that I've been watching for weeks now, this is a rising wedge, typically a formation that breaks to the downside, but when it breaks to the upside, it is a parabolic move as it goes against the odds. So right now we're ranging within this rising wedge, and the question is, will we break down and have a correction here, or will we break up and continue this move? Well, here's what I think. I love to look at fractals. I love to look at how things have previously played out to give us some clues as to how they could play out. Because one thing's for sure, what Bitcoin loves to do is surprise everyone, to not do what everybody's expecting it to do. Here is the rising wedge we're in right now. We have since had a bounce since this chart was published. But as you can see here on the left, we are exactly in the same spot in the cycle. We are right here ranging in the same rising wedge pattern as last year in 2019, right before the bull run in 2020. And so as you can see here, we were here, we ranged for a little while longer, up and down in this range, and then we blasted off out of it, came to retest the base and off to the races. So what I've been saying for the majority of this year is that I don't believe Bitcoin will get above 45,000 for this year. And simply because we've always done this, we've been in a range range bound. It's not like Bitcoin doesn't have a massive parabolic run until we get closer to the halving, and even then it's some months after the halving. And this has also happened in other bull runs. So we are in a same pattern formation right now, and based on previous bull runs, and also that Bitcoin tends to do this in bullish environments, we may very well break up from here. I don't want you guys to be surprised either way. So here we have, this is what I want you to understand. I want you to train your brain to understand that the media doesn't tell the truth about things. They spin narratives however they are paid to do so or however best benefits them. So the Bitcoin rally is mostly driven by macroeconomic factors rather than ETF narrative. So this is something I've been saying on the channel for a while now, and it says here, this latest rally was less about the spot ETF developments and more about macro forces. This is because a smaller than expected Treasury Q1 supply estimate yesterday and dovish FOMC sent bond yields tumbling and in turn risk assets soaring. Whether this marks the start of a new global liquidity bond uptrend remains to be seen. In other words, whether the money printer gets turned on right away remains to be seen. I believe that it most definitely will, because they are not going to want the civil unrest of people's banks failing. And I'm going to show you later on in this episode why. Banks are already failing. Banks are pausing withdrawals, and we're just experiencing the tip of the iceberg as far as that goes. So if the Fed is faced with two options, whether it's to bail out the banks and avoid that civil unrest, especially during an election year when people have to believe the economy is strong, versus not bailing out the banks and letting them fail, I think they're most definitely going to choose to turn on the money printer. Again, it is inevitable. So as you know, we have investing giants like Warren Buffett, who previously called Bitcoin rat poison and a scheme for money laundering, investing in Nubank, which is a Bitcoin-friendly bank that he's now $130 million in profit since 2021, and entities like BlackRock that also called it an index for money laundering and, quote, said not a single client was interested in investing in Bitcoin or crypto, to 3 to 4 years later saying that it is a flight to quality. Do you think that this was a sudden flip of the switch in their heads, that they suddenly woke up and saw, hey, FOMO kicked in, and I understand I need to be part of this because I see people making gains. I see that people are interested in this and I need to jump on board that train? Absolutely not. They've been planning for this for a long time. The thing is, BlackRock will never promote something that it doesn't have ready to take your money yet. Meaning, if they don't have an infrastructure and rails, payment rails set up to be able to say, hey, we think this is an amazing asset, you can invest through us, they're most definitely not going to promote it. That is for sure. Their rails are ready now to accept your money by way of an ETF, and now they're ready to promote it. It's as simple as that. I want you to see outside the lines, just thinking outside the box. And speaking of thinking outside the box, here's a clip from Robert Kiyosaki. I'd like to know what you think about this, whether you like him or not, and you agree with his views.
The biggest asset in America today is student loan debt. In other words, America is getting rich, and thanks to Barack Obama from Hawaii. Barack Obama basically let student loan debt loose, and now it's our biggest asset of America. In other words, America is trying to survive on the backs of our college kids. If that's not criminal, I don't know what is. Still keep saying to people, put yourself on your own gold standard or silver. I have a lot of silver, eagles and coins, because I want to be off the grid. I want to be off the Treasury and Fed and Wall Street. I want nothing to do with those criminals. Do you know what I mean? As Warren Buffett's, somebody just asked, well, Charles Payne asked me on Fox. He says, what about Wall Street saying, I said, Warren Buffett said it best, never ask an insurance salesman if you should buy more insurance. And it's like, because the Wall Street Journal is saying everything is good in S&P land. I'm going, how would you believe those guys?
So there you have Robert Kiyosaki's take on how the government is composed of quote unquote criminals, and that he wants to be off the grid on his old gold and silver standard. And of course, we know he's buying Bitcoin to be his own bank. And also his point about the fact that America is riding on the back of student loans to survive, which is completely unsustainable. I mean, where we are at in the economy, I don't think many people realize, just because it's hard to imagine. But what do you think about this? Do you guys own gold? Do you own silver? I like silver myself, but I am very heavy crypto, and that's just me. And then we have another clip from famed investor RAOUL. He's also an economist, on why he believes it's inevitable, like gravity, that the Fed will turn on the money printer. Check it out.
These are the maths that form part of that everything code thesis. It's like, there is no way they can have interest payments here, because what's going on today is they have to keep issuing more bonds and more bonds and more bonds
to pay the interest from
the previous ones. So they can't do it.
And so walk me to the conclusion of that.
So the conclusion of that is there is only one outcome to everything, which is more cowbell. So they either yeah. And so they either stop yields rising, like in Japan, it's called yield curve control.
Okay.
And what that is we will pay this price, let's say 5% on bonds, regardless of how many you sell us. And to do that, they print money. Or
it's either more liquidity.
or I think they're trying to overshoot with inflation on the downside, bit of unemployment rising. So then they have the cover to cut interest rates.
Okay.
And stimulate. Election year, always stimulus. So all roads lead to more cowbell.
All roads lead to more cowbell. However you want to put it, stimulus, fake money, money printing, all roads lead to the Fed wants to. I actually really like his theory on the Fed potentially trying to overshoot to the downside so that they can then cut rates and stimulate the economy once again for those feel-good feelings during election year that people will, they want to stay in power. This makes all of the sense in the world, and it seems to be inevitably where we're headed. And when the stimulus comes back into the market, new money comes back in. And as we already know, new money's coming in by the way of major institutions that manage trillions in dollars in assets, to the like of BlackRock, VanEck, ARK Invest, and the list goes on. There are 10 or more than 10 ETF applications for this year for Bitcoin. Guys, this is brewing up to be the perfect storm. And then I wanted to just do a little report on this. I know this was circulating earlier this year, so don't make a comment that it's old news in the comments. It's just I want to highlight what's happening within the government. There's a revolution happening, and people are starting to get tired of this. So this U.S. lawmaker proposed to cut SEC Chair Gary Gensler's salary to $1, the head of the SEC. The Financial Services and General Government Bill proposes to drastically cut funding to the SEC and other government agencies. So he proposes to be $1 per year as a part of a wider proposal to defund the regulator. People are not happy with what's happening. There's a lot of unrest in the government and a lot of disagreement going on. And I'll come back to this, but I want to make another observation here as to the fact that they're also sick of this anti-crypto crusade by Elizabeth Warren, who's said to be lining her pockets with bank money. I mean, they are looking for excuses to demonize this technology, mainly because they have propped themselves up all of these years by way of the banks and, receiving those bank payments in one form or another. Here it says, the Hamas funding story is why crypto is sick of mainstream media. And I'm sick of it. I've been sick of it. I'm telling you guys, if you pay attention to the mainstream media, it is not going to be a good road for you. You're going to be led in all astray. And one of the best periods I had in crypto was when I completely tuned out the noise. I didn't watch anything, read anything other than within our community of people like myself and other crypto advocates who are looking into this day in and day out and have been in this market for a long time. So erroneous reports of crypto funding Hamas are yet to be corrected by the WSJ, Wall Street Journal. No wonder people in Web3 distrust the role of reporters in establishing truth in the world. It is difficult to get a man to understand something when his salary depends on his not understanding it. So there's a conflict of interest clearly here. And it's reported to be, look at this. The Wall Street Journal erroneously reported last week that Hamas and associated terror groups have received tens of millions of dollars in crypto, and that the money was being used to back the current war in the Middle East. However, it came out that it was probably more likely in the thousands. And, regardless of what the exact number is, they grossly overestimated it and then made it a campaign. That's the point. The campaigns and narratives can be spun at the drop of a dime, and we are not going to fall for it. Now, Kevin O'Leary really screwed up. He screwed up in the crypto industry and he lost a lot of people's trust, including my own. I happen to think he has really good investing principles. He is a shark. After all, he knows what he's talking about on the investing front, but he needs to stay away from crypto and out of crypto because he does not understand it and he's only focused on the money. He's not focused on things that make our crypto economy better and growing and thriving. However, I do like this clip of him arguing with Elizabeth Warren, Senator Elizabeth Warren, about crypto regulation and about, the anti-crypto crusade that she's leading. Listen up.
And I take issue, Senator, with your concept that it makes it easier to do money laundering. Currencies have been used for drug trafficking since the 60s in the American dollar when it was thrown out of a Piper aircraft in a duffel bag. The American dollar is also used by bad actors all the time.
Mr. O'Leary, I appreciate your point that everyone tries to engage in money laundering. That's what terrorists do. That's what drug dealers do. And that's what states like Iran and North Korea have done. The only point I'm trying to make is, should the same rules against money laundering apply to crypto in the way that they apply to banks, to stockbrokers, to credit card companies, to Western Union? And I think your answer to that was yes. Is that right?
No.
Mr. O'Leary, you have 30 seconds. Keep your answer short.
It's not yes. I'm just saying, if you know your client rules on both sides of the transaction and use a crypto such as USDC that is regulated, you solve this problem, Senator, overnight.
Well, I appreciate that you want the same kind of rules to apply to everyone, and we can talk about what's needed to make that happen. The dark underbelly of crypto is its critical link to financing terrorism and human trafficking and drug dealing and helping rogue nations like North Korea and Iran. Crypto doesn't get a pass to financing terrorism and human trafficking and drug dealing.
Guys, I just can't even listen to this any longer. She clearly doesn't want to hear what anybody has to say that has any kind of valid opinion. Now, I'm not validating Kevin O'Leary, so don't attack me in the comments about it. He was supposed to be on my podcast, actually, before FTX collapsed, and since then has declined to comment or get back to me. So I think we know where he stands on the crypto front. Anyway, the point is, she clearly just wants to cherry pick for her anti-crypto crusade, and that's it. And she wants to drill it in people's minds that crypto is for nefarious actors, bad actors, and used for bad things. So let's get back to one of the main pieces of the news of this whole thing, and just what is going to skyrocket Bitcoin into its all-time highs and beyond, and hitting that $1 million mark that Michael Saylor and all of these top professionals talk about all the time. Here's how this happens, okay? Citizens Bank becomes the 5th bank to fail in 2023. How are we having banks failing in the US? I mean, there's a major issue going on here, and people don't see it yet. It has to really touch your bank or your region to hit home, but it's best we start opening our eyes before that happens. The banking crisis continues in the U.S. as another regional American bank shuts shop. The government has shut down Citizens Bank due to financial issues, allowing the Federal Deposit Insurance, FDIC, to take control without providing any public warning. It's the 5th bank to fail in the nation this year. Other failed banks are on the list. I mean, there's many of them. This is crazy, you guys. This is crazy. I mean, the whole reason we use the banking system and why people are reticent to use crypto is because they have to have the responsibility. Basically, they can't call a bank and get their funds insured, and they can't make mistakes because the funds are lost forever. But why do we even use banks if there is no insurance anyway? I mean, it's just wild to me. It's wild. Here we go. Bank of America, Chase, and Wells Fargo customers hit with deposit delays after major glitch, with payment processor delaying 900,000 transactions. The Federal Reserve confirmed glitches were due to a processing error at private sector operator Automated Clearinghouse. Okay. I mean, this is also crazy. You go to make a withdrawal and your bank says that there's a processing error and a glitch and sorry, but you can't get your money. Stop holding pending charges and making people go negative. This is ridiculous and will probably move banks with how ridiculous this is. Where's the money? And will you be converting my bills that are due today? That's the whole point. Your money is just paper notes, an IOU by the bank that has already lent it out or leveraged it and could go down at any minute. And that is the reality of it. And it's not looking good. It's not looking good. $40 billion in unrealized losses hits JP Morgan Chase as Bank of America, Wells Fargo, and Citigroup face exposure to U.S. Treasuries. Okay, so let's unpack what that actually means. JP Morgan Chase has quietly revealed tens of billions of dollars in losses on securities, according to a new report on the company's overall balance sheet. The banking giant is now stuck with a roughly $40 billion in unrealized losses as of Q3 of this year, which is a 20% rise over the previous quarters. I mean, this is crazy. The new numbers were located in a footnote on the, okay. The dangers of unrealized losses came into focus earlier this year amid the collapse of Silicon Valley Bank. The bank's sudden failure back in March was sparked by an announcement that it had booked a $1.8 billion loss from selling a portion of its underwater bond portfolio. As a whole, Moody's estimates the U.S. banking industry is facing approximately $650 billion in unrealized losses. These losses stem from a historic collapse in bonds amid the Fed's push to keep interest rates higher for longer. So the Fed is breaking the economy. I mean, like Raoul Pal said, maybe their goal is to overshoot so they can step in and save the day and flood the system with liquidity again. But I mean, these kind of numbers lead to bank failures, period. They are massive, massive losses, and this is a big deal. And, you know, like I said in the beginning, there are two options. Either the Fed steps in and bails them out, or lets them fail and completely messes up the entire economy and civil unrest. And imagine people who can't go to the bank and you can't get your money out. I mean, that's a crazy scenario. You have no control. And the whole point of crypto is that you have total and complete control. And I believe that is a basic human right. So I'm really excited for the future of crypto. And as you can see here, this is the next logical step in the process. Banks are going to scramble to get a part of Bitcoin because they're not going to want to be left out. And they are seeing that if they don't adopt it, they are going to be left out. So HSBC is on the cutting edge. Actually hosted an event called Money 2020, one of the biggest fintech events in the world. And HSBC was there talking about, you know, the metaverse and what their plans for the metaverse. This was a few years back. And also about how they were going to custody. I mean, they've been on the forefront of this. And I think they're doing it well and they're going to win. HSBC to offer tokenized securities custody service for institutions. So the platform planned for 2024 complements its new offering for tokenized gold as well as one for issuing digital assets. So not only are they going to custody your Bitcoin, they're also going to custody these tokenized securities. This is big. This is big. And this is the big bank stepping in and saying, hey, we want a piece of this pie too. So these are all factors that are going to drive these digital asset prices through the roof, you guys. Like once this institutional liquidity comes in, it is going to be like nothing you've ever seen. And let's hear what Michael Saylor has to say about banks.
If you're trying to use money that requires banks, you can't trust the banks, right? You certainly can't trust the banks in Africa and South America and most of Asia. It used to be Americans thought they could trust American banks. Now they're realizing that they can't trust American banks. So the first order impact of the banking crisis is people think, well, maybe the money I had in the bank's going away, and so I ought to put it in a bank in cyberspace that isn't controlled by the government or by the bankers, and that's Bitcoin. The second order impact is the solution to the banking crisis is print more dollars. And if you print more dollars, the actual monetary inflation rate goes 10%, 15%, 20%. So you think, why do you think those bonds crashed? Because they're actually claims on dollars. Do you really want to hold $1 billion of Zimbabwe dollars? What if I offered you 10 billion Zimbabwe dollars? I mean, the answer is it's going to a nickel. Okay, so if the paper currency keeps crashing, then you can't own anything that's currency related. You can't own a currency derivative. You need to own something that politicians can't print more.
So this is a really important point he's making, in that where are you going to put your faith long term and how will this play out? What is the US dollar backed by? I mean, it's all of these factors to be considered when you're deciding where to store your money and which side of history you want to be on. So I just thought this was just a funny ending to a very serious episode, some comic relief as the SEC faces hiring challenges due to experts not wanting to sell their crypto. So basically, they're looking to hire experts to help them out with this, but one of the contingencies to hiring that expert is that they have to sell all their crypto. They can't hold crypto. And of course, nobody in the crypto world wants to cross over to the dark side and not only do that, but have to sell all their crypto in the meanwhile. I mean, nobody wants to do that. So of course they're having trouble. It says here, the SEC's ethic rules say that owning these digital assets can prevent these experts from working on crypto-related cases and to avoid any conflict of interest. Because of this rule, many do not want to sell their cryptos to work for the SEC. So good stuff, guys. Good stuff. Thank you so much for tuning in today. Tomorrow's episode is going to be explosive, so make sure to stay tuned, and I'll see you tomorrow.